Hello, everyone, and welcome to another episode of Squad Academy, where two Texas-based due diligence experts, now turned PE fund managers, discuss and week in, week out, come together and discuss the hottest topics in the economy and the enterprise software space. So, welcome to another episode. We're here to have a fun conversation. But first of all, Edison, my brother, how you doing?
Doing good, man. Doing good. It feels good to be back. Got some interesting news today, so we're excited to dissect it and lay it out for you guys.
Absolutely, absolutely. So, just jumping right into it. Um, you have three topics for today. First one will be Everbridge, an enterprise software space that I just will be talking about some of the developments there. I believe they're also a portfolio company of Thoma Bravo, which is also a bigger PE firm. So we'll talk about that. Then we'll talk about some of the hottest news in the economy, right? Reddit's IPO. We touched on that last week. Wanted to just realize that it actually went public this past Thursday. So let's kind of talk about that, give an update in that space and what's going on. And we'll round up with, of course, the Fed rate. So Jerome Powell, the Fed chair, came out this last week and announced that the rates will be held steady, right? So no increase or decrease in the Fed interest rate. So we'll talk about that and what that could mean for the economy moving forward. And we'll round up with a few other points that we have in mind. Edosa, Everbridge, what's going on? What's going on over there? I guess give a little bit about the company for those who don't know what Everbridge is. Then kind of like just give an updates on that
For
company.
sure, for sure. Everbridge. Everbridge is a enterprise software basically focused on critical communication. Now, what does that mean? They basically help with notification, updates, and alerts with regards to all sorts of things that we should be concerned about. So, terrorist threats, natural disasters, and the likes. They basically keep companies and employees of companies informed about any security risk that they should be aware of geographically or cyber attacks and or system shutdowns and the likes. They basically help you so that you won't be caught unawares. That's what Everbridge does. Now, how did this company get to our radar? They were founded in 2002. Now, therefore, if you think about that, it's very plain to see this is a company that was shaped right after one of the biggest security threats globally,
9/11.
9/11,
Yeah.
right? So they jumped right out of that, and I'm assuming really saw that look, there's a need for this in the market. Companies need to be aware, um, to be to see data at the fingertips, right? Companies and their employees need to be aware of things like this. So they developed Everbridge 2002, and they've grown the company for decades now, right? And typical human nature, they went public 2016, right? Raising about $70 million. When they went public, the valuation, ballooned to about $6.4 billion. So they're doing good. They're cruising, right? But after going public, I would say there's that post IPO plateau that happened. You've grown, you've done your growth trajectory, you're up there, you're now big, you're now supplying the market with, but the market is not expecting, back to back data on your updates and your growth. And that's not really what was happening, right? I think they kind of plateaued, they were not growing as fast again, they're not getting as much love from the markets, and the valuation sort of surfaced around $1 billion, this at least for the past 12 months,
Okay.
most recently. Now, this is a perfect story for where private equity says, that's what I want, right? So a company who's had all the makings of a cash flow business,
Yeah.
a $6.4 billion valuation business as early as 2016, is right now valued at about $1 billion. There's a gap there. There's a story to be told there. There's something to be exploited in that for good reason. They're like, okay, there's some operational or financial efficiency that can get this company back to what we believe is their intrinsic value, right? Then comes in Thoma Bravos, and they came in last month actually with an offer to acquire the company for about $1.8 billion, right? This is a second. I won't say second bid. This is still that they are bidding to acquire the company, but they upped that bid price by as much as about 30%, right? To
Are
what
they
everybody.
the only bidders?
Um, right now there is serious bidders, so it wasn't. Everbridge didn't go into the market like
Okay, look at the sell
we're
it.
looking for buyers, right? So they came in with an offer saying, we want to take you, you're currently publicly traded, we want to buy you out completely, we want to take you public, and we want to take you private. So they
Mhm.
sent an offer notice to all the shareholders. The board has to vote on that and approve. But the company has been on average about $1 billion. You get an offer for $1.8 billion. That gives the shareholders something to really think about. And yeah, it's a bright spot for the company, I think, if they take it private. Now, what to expect? I think current shareholders get a good return if they exit now and take the company private. I
Yeah.
think for Chama Bravo itself, the prospects are in good hands. The current CEO of Everbridge, David Wagner, is experienced cybersecurity, enterprise software CEO. He's a veteran. He's even led a company. Um, he's led a company, Entrust Data Card, that has been owned by Thomas Bravos before. So this won't be his first radio, and this won't be his first time being a CEO of a company backed by PE firms as well.
So that's
So yeah,
interesting.
that's why I think. Sorry, go on.
So that's interesting. So do you know if that first company, do you know what that company is today? Do you know if they eventually went public, if it was spun off as a public company,
That's
or
a good question. I would assume that they sold it off. I don't know if the sale was
there's some kind of
acquisition or
exit, right? Yeah. I mean,
yeah, yeah,
I'm
there was
hoping there
definitely
was
an
some kind of
exit.
exit. Yeah.
Yeah, because and how these things happen is um recommendations work in a very good way. Somebody you've worked with before, made some good money with. Your managers are your partners, right? And you run this company, you acquire this company, you run it, and have some form of exits, and then the CEO leaves another company and is doing well there. It's a no-brainer to
To bring them back.
reach
Yeah.
out with a call and say, "Hey, what's going on? What does that company look like? Let's do this again."
Yeah.
Essentially, so I would assume that the company had a successful exit. I should have checked. I think it should either be an IPO or an acquisition.
Okay.
But yeah, now that's what we have for Everbridge, and the entire security, would I say, security notification industry at large. What does this mean for it? This industry is not new to private equity. The Vista Equity, Everbridge, Carlyle, and Blackstone have participated in this industry in the past, and it's a growing concern. It's a growing need. People need to be updated. People need to be able to analyze and understand all sorts of threats, particularly cyber threats, particularly threats regarding downtimes and capacity. Right. I think when people think about events communication. They think of terrorist attacks and they think of one-off events. But if you understand how frequent these things are and how global they're becoming, you see how big the market is. So it's an interesting space to watch, and it's an interesting thing to see. This is one of the few things we're going to keep you guys updated on, from private equity acquisition to take private. I will keep you updated on how the company still fares, to the best of our abilities. Keep you updated on how they fare after going private. Right.
Yeah, I think that's an interesting one. I'm not necessarily sure how the business works to be fair. I don't know much about Everbridge to necessarily speak on the
Mhm.
operations or technology or underlying technology, right, and how that works. Um,
Yeah.
I think it'd be interesting. I think it'd be interesting to know what Thoma Bravo's strategy is to grow and expand this platform, right? This seems like an industry that could heavily benefit from AI, if I'm being honest.
Oh, for sure.
Um, so I wonder if that's Thoma Bravo's strategy, right? They probably look at the technology and say, you know what, yes, this business has struggled here and there. So maybe there's a room for us to further enable this platform with the additional implementation of AI into its core technology. But then again, I don't know what kind of strategy they might take, or maybe they're taking a strictly financial position where they're saying, you know what, let's just focus on how we can grow this company financially over the next couple of years and exit it. being that it's been a company in operation for 20 plus years, so maybe they might not want to necessarily toil with the core technology. I don't know, but it seems like an industry that could be disrupted by AI if they don't follow suit, right? Just one of those. Security alerts, this and that. Yeah, it seems like an industry that can heavily benefit from AI. But I don't know. I don't know. It'll be an interesting one to look into. Like I said, I don't really know much about them, but yeah, it'll be interesting to look into it. Just look into it. Yeah. Do you do you have any? But then again, I guess it is a public company. So, like, do you have any information on the actual numbers? So, like, revenue over the past year. Um, what the OpEx look like, what the CapEx look like, the profits or loss. Because you said Thomas Brothers is trying to acquire them at $1.8 billion, right? So I guess I'm trying to say, like, what does that look like in terms of like revenue multiple, or I'm not sure what kind of numbers they're bidding for it. If it really makes sense from an enterprise software standpoint. Because we both know like the revenue multiple technically around 3 to 5x ish. Um, so I wonder what 1.8 billion brings them down to in terms of revenue multiple. But do we have, since they're a public company,
Yeah.
what do the numbers look like?
Oh yeah, yeah. The information is publicly available. What's interesting is that actually put in a bid of 1.5 billion a month ago. Then
Okay.
this month they upped that bid to 1.8. We talk about determination. Right now, this current market cap sits at 1.4 billion. Basically, waiting for this acquisition to go through, and so that
Yeah.
way the shareholders can realize their profits, right? So that's where we stand right now. Revenue wise, they were at about this past 400 500 was that a billion or
Yeah, I
billion?
said 448 million from $449 million
Yeah,
in the past year. Yeah.
yeah, 448 million. They've grown from about 270 million, right, in 2020 to 440. So let's say 450 million. So that's doubling revenue or close to double of revenue in not so long, in 2 years. So they are you will say them as a giant company. They're a very mid-sized, average company. Hence the valuation you see there, and they're just going. They've been make loss making for the past 4 years or so to speak. Negative pre-tax income on the balance sheet. So it's something to keep watching, and I fear that what you said about the acquisition, I think it's a financial play. I think they're saying top line that's average. It's not interesting. It's $500 million. They're seeing profit that's negative. So it's a no-brainer that let's play with the
The number.
let's play with the expenses. Let's see how we can optimize this company to start yielding cash flow. Right from there, how can we now grow the top line? How can we grow the revenue? So I think those will be the two core focus. Firstly, how to bring it back to profitability so we can start servicing the debt that we use for this acquisition. But then secondly, how can we what's it called, grow the top line? More than likely, it may be a bolt-on acquisition strategy, acquire more companies, fastest way to grow the top line revenue. Um, that's what they probably do. But I think it's very clear for them. It's you bought a company that's luckily still has signed on long-term clients, so that's is good recurring revenue. You just need to get it to be more financially efficient, and from there start growing the revenue again.
Yeah, I think that's an interesting one, right? Because even when you look at the current stock on the public market, right? It's trading around $34-ish dollars, right? And
Yeah,
that brings it down to market cap of around 1.44 billion
probably.
dollars, right?
Yeah,
So it seems like the actual bid is not that far off, right? It's
yeah.
not far off.
Just
I
know
think
that
you go
the
ahead.
market is also responding to because the first bid
It's
was a
also
month ago at
the
1.5.
market is also responding to
Rallied
claims
up.
that have been made
Yeah,
as well. Yeah,
yeah,
so I wonder what that's looked like since the bid was actually solidified, right? Because that
yeah.
that that's interesting to see as well. But regardless of how we want to see it, right? Even if we're saying market is responding, market is responding or not responding, right? That the actual bid actually means around about a 3.3x revenue multiple. So it still kind
Yeah.
of sits around where we actually expect it to look for like an enterprise software company, especially since they've been kind of loss making for the past couple of years. So it's still a fairly good,
Yes.
regardless of how long they've been in operations, it's still a fairly good bid. Um,
It is. Yeah, you're right. I think it's a big win for Everbright,
yeah,
Everbridge, if I'm being honest, because ideally, once you're already publicly traded and you're trying to get acquired by PE, right? You're discussing EBITDA multiples, and these guys had negative EBITDA in some years, they had as low as $18 million in EBITDA, most recently. So it's negligible, it's next to nothing. So I think they're very fortunate that I'm actually not just fortunate. I'm curious why Tom Bravo decided to go the approach of revenue multiple, to value this company. That shows that they are seeing something that we are not seeing, right? And for the shareholders, they're very lucky to get out, you know, based on this metric. If it was 2 years, 3 years after, they should. I mean, this is a company that is more than
this
20 years in
market,
operation. You
especially
get,
in today's market, yeah, yeah.
yeah, more than 20 years in operation, and you're still, if you're a 2 year tech company, startup, everybody's talking about revenue multiple. Nobody, what's EBITDA? Nobody cares about that for you. So they're very lucky to be to get to what looks like the valuation on that basis, right? Because the EBITDA is next to nothing. So the bid they'd have been seeing maybe a short seller, not a PE fund. So it's an interesting situation. And that
Yeah,
also means you're right. But that means they're seeing something that we're not seeing for sure.
they are, they
For
are.
sure.
Because I think, I mean, one more thing, sorry. So just that the revenue must be exactly 4x. So because you said
Forbes.
the most recent bid is 1.8 billion, right?
Yes.
Yeah,
Yes.
and the last revenue was 445 billion. So 445 million. So that gives it a revenue multiple of about 4x. So yeah, that's good in my opinion. But the one thing that you mentioned as well was that they've kind of been loss making for the past 4 years ish. So
Yeah.
I definitely see something we're not seeing because it seems like maybe like a year, maybe like 2019 or so, they started making a loss, right? So maybe there's certain things that change internally within the operation. Maybe they overhired or they invested too much in certain spaces or this or that, right? That's kind of like set them back a couple of years. Maybe these are some of the things that Everbridge has seen and said, okay, you know what? Yeah, there's a path to profitability for this company, especially if they've been in operations for 20 plus years and they've kind of slipped in the past 4 or so years. Then maybe that's something they can correct and put them back on the right path. But maybe there's something they're saying we're not seeing. There has to be something we're saying that we're not seeing for them to value them at such revenue multiple,
Yeah.
regardless of the fact that they're making losses for this past few years. Um, so it'll be something that we could probably interestingly dig more into and try to see what exactly is going on.
Yeah.
But yeah, yeah, that's an interesting one. Um, moving on to the next one, right? Um, Reddit. So we spoke about this last week. We actually spoke extensively about this last week. And we're like, you know what, we'll follow this closely, and boom, all of a sudden, I mean, the D-Day was this past Thursday. But Reddit, yeah, Reddit. Last week we spoke about them conducting the road shows and trying to garner interest around the IPO. For those who don't know what Reddit is, I feel like everyone knows what Reddit is, but they are a kind of like an internet-based startup,
Social media platform.
social media platform. Let's just put it that way, a
Oh,
social media platform
yeah.
that kind of focuses on users and creating communities and discussing different topics and ideas and I think it's a really good platform. To be fair, I use it a lot. But pretty much they went public this week. The target before the IPO was around $31 to $34 per share. And they had about 22 million outstanding shares to sell, right? If I recall correctly. But they went public this week, last Thursday, and at the IPO, the share actually surged 48% on the debut, right? So, and this actually made it the first major social media IPO since Pinterest in 2019. So like I said, it was priced at $34 per share. They definitely hit the mark of raising about $750 million. With a market cap of, and that made a market cap of around 9.5 billion dollars. For those who don't know, because we did express this last week, I mean the revenue for 2023 was $804 million, but they had a loss of $90.8 million. Now this was a reduction from the 2022 loss that was around $158 million. But moving forward, they do plan to fix a few things that would kind of boost the revenue this year. They talked about how they plan to capitalize on the data licensing for revenue. And I think they already have about a clear pipeline of around $203 million in contracts. And they plan to also recognize about 66.4 of those 66.4 million of those contracts this year in revenue alone. We also highlighted that Google has already expanded their partnership with Reddit for Google's AI model training. So this is also going to be another path of revenue for them as well. And the FTC is also conducting some kind of inquiry into Reddit's data licensing practice, especially when it relates to AI, because there's some concerns in that area. But having said all that stuff, last week we kind of spoke about, because I mean you have to think about it. They've done the IPO now. They've gone public. There's going to be a lockup period before folks can sell the stocks. But this stock actually peaked at around $50 or so per share on Thursday. Now last I checked, by end of by close of market on Friday, they had dropped down to about $45 per share. But having said all this stuff, because we spoke about this last week, just the general investors' outlook on this company, because when you look at the numbers, it's not impressive. I mean, this is a company that's been in operation for 19 plus years, has never made a profit, or at least in a full year, right? Has always been generating losses over a year. When you look at the numbers, since inception, they have a total of around $712 million in losses. So there's still a struggle, and there's still a struggle and not a well-defined path, at least I believe, for profitability for this company, which is why they kind of struggled when they came up with the whole um DSP model that they wanted to use to raise capital from the community, which is what they call the Redditors, pretty much those who run communities on the Reddit platform. Because the idea was, okay, you know what? We have this platform, then let's try to encourage the Redditors, those who actually have played a huge part in this company, to buy into the company early on, right? And there are those that have kind of used this model in the past, right? But now, and I was reading through a lot of reports on this, but pretty much a lot of Redditors did not buy into this idea, right? For several reasons. The first one being a lot of them had concerns around the actual financial status of the company. Because of course you have to look at the fact that they've never made a profit. They have been losing money for years. Um, and and this was not a discounted round, like, but then there was no discount. I mean, one of the Redditors actually even published this on Reddit. Because I believe they're using Fidelity to also do this as well. But the pre IPO DSP opportunity was actually valued at $31 to $34 per share as well. So a lot of these Redditors were going to buy in at that pre IPO or that target value as well. So there was no, to them, it wasn't like there wasn't a clear incentive for them to ban, because a lot of them didn't even believe in what Reddit was saying publicly, as far as, we're trying to give these guys an opportunity to join us on this journey. A lot of them not felt like, so this is what all of them felt like. They felt like it was Reddit trying to protect themselves and hedge their bets to prevent the Reddit community from going against them, because
Yeah,
Reddit has kind of had some conflicts with.
notorious for that. Yeah,
Yeah, so Reddit, of course. I mean, to be fair, a lot of people have seen Reddit for this past couple of weeks as a meme stock as well. Like they're not
yeah,
necessarily making money, this or that. They have, in some situations they haven't always been on good terms with the Redditors as well. because
Yeah.
there was an instance in 2021 or 2022 when some staff was laid off unjustly. And there was some kind of protest, and a lot of Redditors kind of shut down the subreddits to show support and to kind of um drive more accountability within the platform, and for them to come out and provide some clarity on what happened. Last year there was also a protest when Reddit hiked its fees for developers that were using its API. There have been set instances where the Reddit community felt like the company wasn't looking out for the best interest of its users, right? Which is why it now looks like Reddit was trying to say, you know what, let's create some kind of win-win situation for ourselves where we give them a chance to buy in, and that way once they bought in, they cannot bet against us, right?
They're tied together. Yeah.
So they can, so we're not bound together. So you cannot be shorting our stocks and making us lose money. And do you know the funny thing about this? Because Reddit actually included this message about them being a possible volatile stock due to
Yeah, yeah. In the
Wall Street
offering. Yep.
offering. Yeah,
During the
because they're
Wall
like,
Street bets, all these people that did that. Yeah.
exactly. So I thought that was really interesting because they know, I mean, they know what potentially could happen, and maybe this was just a move to kind of prevent that from or reduce the chances of that happening. Um, but I mean, but just stopping there for now because looking at where the stock is today, looking at the fact that I mean, you can even find, I mean, you can even look at the fact that I mean the investors actually exited. Funny enough, I don't know if folks know this, but even Sam Altman is actually one of the key investors. I think he led like a $50 million round back in 2015 or so. Sorry, back in 2014. He had a 50 million funding round, and he has. I mean, his stake in the company is now worth over $400 million. And this was even before the trading began, right?
Wow.
So the stake was about $400 million. And he actually served on the board from like 2014 to 2022. So he's been a huge part of this company for years. Of course, I think he
Impressive.
had to take a step back to focus more on ChatGPT and to avoid any kind of conflict of interest. Sorry, on
Yeah.
OpenAI, sorry. And to avoid any kind of conflict of interest and stuff. But it looks like short term, the investors made the money back. We already know that Steve Hoffman and Alexis Ohanian also sold about 6.7 million shares or so through this IPO as well. So they made the money back. I'm looking at where the stock is today. They probably made the money back just by going public in itself. They raised the money that they needed. But in long term, now looking at the actual numbers, because the public market does not lie, right? There's no like everything's gonna be disclosed. What do you like? What do you think about this company? Do you think this is still looking at how it performed in its first 2 days of going public, looking at the fact that the community is still there, they try to engage the community. Now I don't know how much they sold in that DSP round to the Redis community. I don't know if they're able to sell all. I think they actually reserved about 1.6 or 1.8 million shares for the Redis community. I don't know if they sold everything. But looking at all these facts that we have in front of us, what do you think about this company and what is it as a long-term um view for this Reddit stock?
Yeah. In all the coverage I've seen about Reddit, it's they're really talking about the risk. It's more of, oh, we're concerned about their users, we're concerned about the moderators. It's concern. It's always about if Reddit can solve this, if Reddit can control this, if Reddit can align this group. So all the conversation about Reddit to me has always been about this point. But typically, when you see social media platforms go public, you're hearing discussion about users,
Yeah.
user growth, so upside news, right? And but Reddit look like it's more about blowing out the fires, right? Surviving, which is a very bad foot to start on as a company.
Mhm.
So they really want to play because even once all that is done, they're saying so it's more about the concern is more about like can the company survive all these threats, which I think is a very gloomy prospect. Um, uh, what I wanted to be obsessed about in the next year, 2 years is user growth. And, WhatsApp was notorious about that. Facebook obsesses over that. You get. Um, that's what Reddit should be talking about. Talking about, okay, what's our strategy, what's our plan, and hopefully none of that public, just like Facebook and the rest of them, publishing that data every quarter. user growth, user churn, and that will hopefully rally the market. It seems as if they are accepting that look, this is where we are as a community, these are our users, this is our base. Let's just see how we can monetize further from here. And that is gloomy. Maybe I haven't just read enough into other paperwork, but I wish they I wish they posture and they control the narrative again and start talking about growth. Right? They seem throughout the roadshow, they seem to just be trying to pacify investors and say, trust me, we got this handled, we'll do this, we'll do that. Um, that's not enough. Right. So but where do I stand on them? I'm bearish till I hear growth posturing, till I hear that the management team is obsessed about growth. Otherwise they'll be brutalized in the public market.
Yeah. No, I think that's a fair point. Funny enough, I think one thing they've been quite vocal about, at least based on some of the reports that I've seen and what I've read about them, is they're actually kind of further keen into the strategy of data licensing, right? They're really
Yeah.
trying to capitalize on that space because now they're seeing I mean, the fact that they've already signed contracts worth up to $203 million,
Yeah.
that will be realized over the next 2, 3 years. I mean, that's an average of around 65, 70 million per year in revenue. That's just added onto what they already have existing. And this is minus them growing the advertising side of the business and stuff, right? Um, so there's clearly, I mean, especially when you look at the fact that AI is still in its first inning, it's still in its first phases of development. The more that we grow with AI, the more that we need to train these machines and these models, the more that we need more data to train these models, right? And Reddit is just an absolute bucket of data, raw data that's just lying there, right? People are talking, people are sharing information, people are doing all this stuff, right? So the more they're able to best position themselves as a platform that can be leveraged by AI models, the better for them because the likes of OpenAI and Google and so will find a way to monetize and to reward people who have those kind of information that are needed, right? So I think that's something that they're trying to further key in on the data licensing side of things. So it'll be interesting to see how they grow that side of the business while also growing the actual user side of the business as well, right? Because then again, it kind of supports one another. The more users you get, the more data you get, and the more advertising dollars you can also command as well. So it kind of, I mean, it's kind of everything intertwined into one another. So you're right, you're right. It'll be interesting to see how they grow across the board over the next couple of years. Because now, yeah, like I said, the public market will absolutely. I mean, there's no hiding place here. There's no hiding place here. But I do agree. Yes, still quite bearish until I see what happens. I just think, having said that, I do believe that there's a possibility for a meme stock here. I think this is going to be a meme stock for the first couple of years. Now, I don't know what position they will go. Whether it's going to be another GameStop where it goes all the way up, or whether it's
Yeah.
going to be another some kind of big pharma stock that will absolutely drag to the floor, right?
That's
So,
the fear. Like all they have to do is throw out one policy that upsets moderators, and boom, they are in flames. You
well,
get because they'll just arise and imagine discussing about your alienation on your own platform. Like that's gonna be so. It's gonna be so
yeah, and I,
crazy.
and I think and I think some of these times they were looking at, they probably looked at it and said, like, you know what, we need to engage the writers. Let's get them to buy me because as a company, there is no way they will not piss the community off. There's no way. At some point, they're going to roll out certain policies that they feel will be better for the company, but the people will hate.
Yeah.
And they don't have that much of a market cap right now to withstand that kind of bloodbath.
Volatility. Yeah.
So because some like a Meta or stuff can afford to do stupid stuff, right? I mean, not stupid stuff, but like stuff that doesn't align with the general public, right? They can
Yeah.
afford to do that.
Because they have staff as opposed to these guys using free labor for. So,
Exactly. Exactly.
but
Plus,
if Reddit decides to change strategy, the market will also say, "Damn, your expenses are going to go up." So
exactly.
they have a
plus,
very
I mean,
tight.
plus Meta is a cash cow anyways. So regardless, I
Yeah.
mean, like Meta is they're actually making stupid money. I mean, quarter over quarter, year over
Yeah.
year. Reddit is not there yet. And they're looking at the market cap. I mean, bro, like they're so fragile. Any small nonsense, yeah. So I think these are some things they're looking at, right? So yeah, I do think there's a possibility for meme stock here over the next year or two. I won't be surprised if we see some kind of story, GameStop related story, whether similar to GameStop or the opposite direction. happen, right? But it would be interesting to see what this happens. It would be interesting to see what happens after the lockup period. I think it's 6 months,
Yeah.
right?
But
6 months.
it depends. But yeah, it's on average 6 months.
Okay, but yeah, well, I mean, that's what we have for Reddit. Just a quick update on that one. Moving on to the last one. Fed. Jerome Powell this week came out and announced what we already kind of knew. I mean, we already kind of knew this. But pretty much interest rates were held steady. I think now we're sitting at, is it 5.5% on the Fed rate, if I recall correctly? Around 5.5% on the Fed rate. Inflation year over year is about 3.2%. Generally, it looks like they're seeing a lot of good signs. Unemployment rate is low. Businesses are making money. Consumer appetite is kind of still here and there. Um, but they do not want to drastically drop interest rates to avoid fears of kind of damaging all the progress they've made over the past year. Because when you really think about it, a lot of people were predicting some kind of calamity, right? So, I mean, a lot of people were predicting going back to the 29 recession or the 70s recession, that kind of stuff, just due to how high inflation was, right? I mean, a lot of people did not predict a soft landing, if I'm being honest. They did not predict a
Yeah.
soft landing. But to the credit, they kind of did achieve that, if I'm being honest. Yes, of course, things are still kind of messy. There's been this tech layoffs across the board. But to a fair degree, the I mean, it wasn't as bad as a lot of people kind of predicted.
Yes.
So I think that the goal is because to be fair, the last time the rates were changed was last July, right? Last July was the last time they kind of increased interest rate. Now we haven't decreased interest rates since pre-pandemic, since the pandemic period in 2021 or so. Like Fed rates haven't decreased. So it's been increasing since 2022, right?
Yeah.
So so we're still waiting for that first drop since I mean since the rates started going up. But what's your take on this? Oh, I mean, what do you predict? Because to be fair, he did. I believe John Powell also mentioned that before the end of this year, that we're going to see three interest rate decreases,
Of course. Yeah.
right? Three interest rate drops, right? Now I don't know what that amounts to. Whether it's going to be like 25 basis points or 50 or 100. No one knows yet, right? It's all going to depend on the level. I mean, what inflation rate we're seeing at that point in time, right? And what the economy is saying. Um, But what's your take on this, especially with everything that's going on this year being an election year, all this stuff going on? Where do you what do you predict on, and what's your take on the current state of things?
Well, on his later comment about the rate cuts, I'm not sure about that judgment. I'm not sure about the need to communicate that and the frequency. I like when they were always very vague in their language, but he seemed very clear, and that puts him in a very tough tight corner if he doesn't do that. You get.
Yeah,
But on maintaining rates, I think that was a brilliant idea. We obviously know that. I think the market needs some stability. They've done a good job in soft pedaling and bringing rates to this level without anarchy, essentially. Um, it, it, and we've moved, that point, honestly, we've moved the past 2 years with lots of uncertainty, right? Rates wise and everything. I think market just needs, in an election year where it comes with lots of uncertainty politically, I think the monetary side of things should be showing some semblance of certainty, calmness, and repeatability. So I like the fact that we're maintaining rates where it is. I think the economy still needs this to calm things down. There's still some people doing, so one or more in NFT days, but there's still some signs. There's still some signs that Joe Powell should maintain these high rates,
yeah,
essentially. So that's what I like. I like where we are for now.
yeah. I mean, I kind of echo your sentiment as well. I think it's. I didn't think they should. I think most people actually predicted it was going to be held steady. Um, so it wasn't a surprise if you're being honest. And to be fair, it's been kind of nice also. I mean, looking at the fact that the Fed interest rate is between 5.2 but averagely 5.5%. I mean, it's kind of been nice just for those who have been kind of getting some nice interest rates on their savings, kind of like high interest
Yeah,
on savings accounts. I mean, I'm not going to mention any names, just give them free marketing, but there's some online savings accounts that kind of give you between 4 to 5%. Robinhood, to be fair, does give you around a 4.5 or 5% as well on your
yeah.
uninvested capital, right? So it'd be kind of nice just getting those kind of returns here and there on just
It is. It is.
on capital you're not
It's
using.
it's
So
calmness, and
it's
hopefully
coming.
it will like subpedal inflation or whatever.
Yeah, yeah. So I mean, by the way, that's just a tip for those who don't. I mean, who does have money sitting aside in your checking account or similar? Just put it aside to some kind of high interest savings account and just get something in return. At least hedge against inflation. At least
Yeah.
as you can do. But yeah, I think it's a good step. I do look forward to seeing what those records will look like over the course of the year because they are
Yeah.
predicting that there will be at least three rate cuts. And I don't know how many meetings we have left this year. No, we have in September, November. I think we have about five more Fed meetings this
What
year.
month are we in?
When
Or
March. So we have in
March?
May, July. Um,
Yeah, it should be about four or five.
um, I mean, I know there are eight meetings in general. There are eight meetings in total this year. I think we've only had two, right? January, and we only had two this year.
Okay.
So I think we probably have like six left.
Yeah.
Um, so yeah, I'll be interested to see how they spread those rate cuts over the next six meetings. Right. But yeah, I mean, we'll be here for that. We'll keep you all updated on that side of things. But I think that kind of wraps it up for what we have this week. Um, yeah, any hot topics, any other topics I want to just quickly highlight? Anything like
Um,
top of mind?
Nothing comes to my mind on my end. That's pretty much it.
Yeah, same. I don't know if I have any. I know last week we kind of spoke about SpaceX, but nothing this week. Nothing this week. Nothing this week. Nothing this week. But yeah, that kind of wraps it up for us. Like we said, it's your two friends who are just here just chatting every week. I mean, hopefully we get to bring more due diligence reports on this podcast. Because I know that's something that we kind of do day in, day out. So
Yeah.
at some point we should just kind of like bring in one or two of
And
our
dissecting all that.
dissected
Yeah.
on this podcast, right? Um, but yeah, that kind of wraps it up for the week. Thanks everyone for listening. Edosa, any final thoughts for the people?
Be great, guys. Have a productive week. And take it easy.
All right. Well, that's it. You just heard it, guys. Please, you know the vibe. I'm not gonna go through every single thing every week. Like this, share this with your friends, your family. Let us know your thoughts. If there's anything you also want to hear us talk about in the enterprise software space, any people that you want us to bring on the podcast, we do hope to do that more this year as well. Bring some experts in the enterprise software space, whether PE fund managers or startup founders in this space. Hope to bring them on as well. So let us know if you have any recommendations or anyone to point us to. But yeah, thank you once again for listening. It's been your host, Dakman Adosa. Stay safe, stay blessed, stay healthy. See you same time next week. Bye bye.